Hey guys, Kathy Iconis here, ready for our next session of the month-end master course. So today we are going to be talking about work papers, the scary thing that I keep on talking about, and we're really actually going to dive into it today. So great news, right? Who's excited? Anyone? Do me a favor and put in the question panel that you can hear me and everything is fine so that we can move forward and I can confirm that there aren't any technical difficulties going on. So we have that. I'm going to wait for you guys to answer, put in something there. We have our presentation up. We have QBO ready to go if we need it. And I have several other templates that we are going to be going through today to look at. So let me take a sip and we will get going. So let's see. Okay, work papers. What we're going to be talking about today. And I think I mentioned this last week. Sometimes this session goes over the hour. What will happen, and I'm going to try to slow it down so that we can go through everything, and please ask questions as they come up. But yes, I'm going to slow it down a little bit. I'm going to go through all of this stuff, and anything that we do not get through today, I pick up in the next session. I have time built in for that. So don't worry, don't fret. I got you covered. Okay. So today, work papers. What are work papers? Why do we care? What are we looking at? All of that, right? Then formatting work papers, understanding when to use journal entries or just updating the transactions themselves. And then we're going to go through all those work paper examples for you. Okay. So to kick it off, what are work papers? Very simple. They are some sort of support for a number on the balance sheet. So what you will see, the concept that you will see here is that there's Excel, a document, some sort of support that ties to what is on the balance sheet. So your ending number on the work paper should be the same thing that is on the balance sheet. Okay. If it is not, it's not a good work paper. It's not supporting that balance. What we want is to understand what makes up that balance on the balance sheet. Remember, the balance sheet is cumulative over the entire business. So a balance that is still part of that balance today could have come from some transaction 5 years ago. It can be difficult to track down what makes up that balance on the balance sheet. Let me see. If we look at our balance sheet on here, right? We have things, and let's say, I'm going to look at last year and compare it to the prior year and the dollar change, okay? So I'm looking at this and I'm seeing, let's see, credit card receivables, right? I have a balance of negative 1990 as of the end of 2018, and then the same balance as of the end of 2017. So really, where did that 1990 come from? How far back does it go? I want some sort of support for that. In this instance, it probably needs to be fixed, but there are examples like security deposits on property, maybe um, prepaid expenses, accrued expenses, deferred revenue, these sorts of other accounts that um, are always changing. Undeposited funds, I like to have a work paper for. So there's a lot of these things that just because I have this balance of 9,332 does not mean I can easily see who makes, like what clients make up that amount. So what I want to do is have some sort of support so that I can verify within that support that it's right, that I didn't skip anything, nothing's hiding over there, all of that fun stuff. So this is why we're looking at work papers. Looking at my notes here, it can be a spreadsheet or any kind of supporting documentation. It does not have to be a spreadsheet, in other words. You want it to be something easy to read and a quick resource in case anyone asks you what makes up that number. So if someone says, hey, what makes up the prepaid amount, you can pull up your prepaid work paper and say, here are the 5 transactions that are currently still in prepaid, and they will all be written off by the state, something like that, okay? And then what we want to do is we want to provide some sort of support for those financial statement assertions. That reminds me, I posted the financial statement assertions within our Facebook group. And let me see if I can pull it up really quick. There we go. So I put this in here into the Facebook group already, okay? We've talked about the assertions. Another big term that basically they're things that we expect out of these accounts. So we expect things to be complete, to exist, for us to have the rights to them and have the proper value. So these are things that we want to look at when we're looking at these accounts. So accounts receivable, we haven't done any kind of work paper for them yet. So we want to see, are there any invoices that haven't been recorded yet, right? When we look at the accounts receivable account, we want to be aware of that. Make sure that the invoices are for real customers, that maybe there's sample invoices or estimates that should not be in AR. We need to take care of those, right? And do we expect to collect from those customers? Is it time to write off these invoices because they're so old and we're really not going to collect on them, where that would then mean it had an inaccurate value on AR? So you can look at these things and use these as kind of guides of things that we want to look at when we're looking at the detail of these accounts in here. So the point of me putting this up in the group earlier was that it applied to the session where I talked about balance sheet assertions, but it also applies to this session. So it works on both, okay? But let's go a little bit more into this. When I am working on creating a work paper, I have a specific layout, specific way I like to do things, okay, that makes it easier for people to see. This carries over from my audit days where when you are doing audit work, you actually get the supporting documentation, the supporting work paper from your clients, right, that did it. And then when we go in and review what you did, we add notes and add other information to the spreadsheet. So what you'll see is that I kind of use that same method. But what I like to do, especially when we're running reports, so let's look at one of an AR aging. Okay, I am going to export this list, this report, and put it into work paper templates, test company AR aging summary, right? Put that in there, open up our spreadsheet, make this bigger for you guys. So what you see is the AR aging. This total dollar amount, the 9,500 right here, is the same amount that we have listed on the balance sheet. Now, this is cash basis, so I need to change that to accrual. And now we have 14. Oh, because it's a different ending period. So this one is as of today. Let me change this. Just say this year to date. Okay. Now, this $9,500 ties to this $9,500 here, right? So when I am looking at a work paper and going through things, what I like to do first thing is anything that I add to what came out of QuickBooks, I change the font to red or to a different color so it can indicate that I made these changes to the spreadsheet, to what came um, out of QuickBooks in here. Then what I like to do is maybe I start looking at these things and I see that, hey, there's negative $30 right there. And what it does is, remember, your month end is a check of your check, pretty much checking all the numbers. Let me go back to AR. So I want to see what's going on, these things that are not right. Let me fix them, right? So I have this amount, this invoice here that is negative $30, right? Discount. I'm impressed that I could create that. See if I can error when I save and close. Okay, so I can create a negative invoice. For some reason, I thought that was still a credit memo, but okay, sweet, right? So I have this negative invoice, but I have another open invoice. So why don't I apply that $30, right, from this invoice to that one? So then I have just okay, I did the whole amount, didn't I? Receive payment, receive payment. Oh no, I did it right. Okay, so then when I come back to this now, right, my balance is 2203. So the dollar amount hasn't changed. The ending dollar amount hasn't changed here, but I removed this, okay? So I applied discount to other invoice, right? So I made a note as to what I changed. I can highlight this or whatever. This is how it shows the work that I'm doing in QuickBooks with this supporting documentation in here. Let's go down to this marketing group client. So I have these payments from 2012. Remember, this is my messed up test company, right? So they're not applied to invoices from back then at all, right? We had these, they were listed, unapplied payments, 3,800. What do I want to do? So I can create an invoice for the marketing group client, right? And let's put it in the end of 2012. And I have no idea what services do we want to do. There were two of them, right? Two 3,800s. So we're going to do that. You save and close. So now the problem came in, it's like we didn't have the invoice. We got the payments, but we didn't have the invoice for these payments. So what I'm going to do is now I'm going to come in and apply the payments to that invoice. So I have that unapplied payment right here. It should be giving me the other one. Let's do it the other way. Let's go in and do receive payment. Marketing client. Okay, so if I do this, then I can apply it to both, right? Now it has zeroed out and I have gotten rid of that amount. Now it's not listed on here. So I created invoice to clear unmatched payments. So in that instance, now my dollar amount has changed, right? So maybe I want to come in here and do revised amount. Okay, and I'm gonna put in that. Actually, let me copy the format and put it over here and then change it to red. Can I go even one step further and do this one? No, it's adding all of that. Okay. So add this down. I'm going to put this all the way down. Again, I'm going to make this right, make the formulas work. But just want to get there, there, there. Make sure my sums all work up. You see the work. Okay, so now what I do is I get rid of that 0, right? Or make this 0 because the new balance is 0 versus before was 7,600. So my new ending balance is 1,700 or 17,000, and I can see over here my new balance is 17,000. So what you will see me do on work papers is write 17,167 and say per QBO, and then I have a difference, and I could say it should be 0. So this is my check to make sure that my that those still match. I do this on these work papers to show that if I come back and delete something, it triggers my eye and says, uh-oh, I messed something up. My work paper no longer works. Okay, so undo that, save. Okay, so any questions yet on anything? I'm gonna pop this out and pop back in, make sure I am not missing any questions. Okay. So coming back over to the PowerPoint, looking at this, we export the details from QBO or some other source, right? We use a different color for our additions or our notes. We note any differences and explain what happened. And we want to include a note on the total, like I said, the total amount, and confirm that it matches the amount on the balance sheet. Cool? Cool. Now, the next question is, what happens when we're going through this stuff, and when, how do we go about fixing things on month end? Do we go in and do journal entries, or do we go in and update transactions? I am of the belief that we go ahead and update the transactions. I've worked in a past where I told you guys I worked for a global construction company that has a huge accounting department, and we didn't actually update the transactions because the controls in place were if you created a transaction, it stayed in there, right? And what you had to do was create a journal entry to fix it. The problem with journal entries is that you have to have a clear understanding of what was the purpose of the journal entry and what it was connected to that you're fixing. And that can be difficult sometimes, right? You can be careful with that by creating an Excel spreadsheet and explaining why you're doing the journal entry, what information you use to get to that number to create the journal entry, and you can actually attach it to the journal entry so there's some supporting documentation. Make sure that you have real good descriptions within the journal entry itself to say why you're doing things. Another thing you can also do is when you are doing journal entries, remember you can also apply it to a customer, a vendor, any kind of name. You can put in a class or location on these. So later, if you're running a report, you can run a report by, say, customer. Now you've done the journal entry, it will show up on that report with the detail of the information. Makes life easier that way. So, like I said down here, you can attach a file to explain it. Now, because we're smaller departments, we're just us or what have you, it's not some huge thing. I prefer to just update transactions with InQBO. You saw what I just did where I created the invoice to clear it. Like I created it and I made that change to make this all work, right? The reason I like this too is we can still track down what's going on through the audit log. You can see what changes I've made. You know, I added this invoice in here, all of that sort of stuff. So I like it. It's really easy to see the view of things, what was changed. So anything that's highlighted when you're looking at the audit log is what has been changed historically. You can see who made the changes, all of that stuff. So I really prefer it. Now, what happens, let me get back over to dashboard, sorry. What happens is you have to be careful of those prior year balances. So if a tax return has been filed, you might not want to change the history of the dollar amounts back then. So my example of changing, creating an invoice in 2012 might not be great if I don't want to change the numbers of 2012, because what I've done now is I've created revenue in 2012 by creating those invoices or that one invoice, right? So there's alternatives to that, and that's where we can create journal entries in the current period to take care of fixing a prior transaction, okay? So let's look at one. Looking at, let's take this one, the 133.40. Let me go over to reports, AR. So this 133.40, right? We have a payment that was made in 2016, and it left us an open balance of 133.40, right? It was not actually, it left us with a credit of 133.40. So we needed to record extra revenue on there, and we didn't. So what you can do in the current period to fix that, let me just open up another screen because this usually throws me for a loop sometimes. So what I'm going to do is I'm going to create a journal entry, right? I am going to date it the beginning of this year, right? I'm going to call it fix old AR. You can use journal numbers or you can put in descriptors. The problem with these descriptors when I do them is that QuickBooks wants to put a number past it so that every single time. So I'm usually overwriting the journal number with just an explanation on here. It's just the way I do things. You can use numbers if you want to. So let's look at book something to accounts receivable, right? Now this is where I freak out to make sure I have the right debit or credit. So we need to create an invoice, basically, right, of 133.40 for the current year. So 133.40. So to clear old negative AR balance. I want to put in the name of it, so medical device. And then I'm going to book it to offset it to a revenue account this year. For this instance, I'm going to go to uncategorized income if it let me. Right? Do that. I'm still going to put it to that customer. So if I were to run revenue, it would show that name on it, that customer on it. So I can save and close. Now I have it going the wrong direction, right? Because when I come into this payment, let's see. Yep, I created the wrong direction, guys. Really bad. Saving, okay. Simple fix, even I do it, put in the wrong dollar amount, or put it on the wrong side, save and close, right? So what I can do from here is I can receive a payment on the medical device and clear that. It's a $0 transaction now, and I have gotten rid of it. And I'm gonna say cleared via journal entry to uncategorized income on 1/1/19. Right, so you see I'm putting detail in here so we know what happened, what we did to fix things. Another thing you can do, let's see, let's look at another one. Find another negative. Fortune 500 marketing agency, right? So I have a deposit of this $250, right? So what I can do, instead of that journal entry, I could just make it an invoice, okay? Remember, this is why I create new screens, because I already forgot the dollar amount. Let's see, we'll do that, make it 1/1/19, do a save, right? Does that show me what that amount was? Oh, it was $250. I did it too much. Okay, save. Then I go in and receive the payment. Do that, right? It's matched up, zeroed out, save and close. One thing you might want to do, let me come back to this invoice. I can put in details here to clear old AR balance. Okay. Save and close. Yes. So that one was up here. Created invoice. Oh, let's clear that. Good. Cool. Right? So that's the difference between creating the journal entries or just updating transactions, or even creating new transactions. Any of these sorts of things work for you. Okay, taking a sip. Next, let's start getting into the real other examples of work papers. As you can see, I've been going through the AR aging as an example of a work paper, right? But let's step it back one and do petty cash. So when we think of petty cash, this is something that the client deals with, right? They have cash on hand and it's a matter of, well, we still need to verify that amount is correct. So I kind of put that on the client, but I give them tools to manage it. So here is an example of that. What I have done is I have taken the template that's available within Excel of creating, there's a petty cash template, right? I've done that and blown it up a little bit. And so this is what I provide to my clients. And I'll put this in our Facebook group so you have access to it. I actually sell it on the website. So you'll get this one for free. So in here, what we have is we have a beginning dollar amount, right, of $100. And the client is then responsible whenever there's any transactions to put those transactions and list them out in here. I have charged to, if you want to put the account or received by or approved by, you can change these columns around if you want to. At the end, I say, please confirm the balance in the cash box and get signed off by a manager. So I want some sort of signature, some sort of support that someone looked at it and verified that that amount's right. And so this one would be for a Bill.com client. I say, once complete, please email into Bill.com with the receipts attached for the month. So not only do I want this detail, I want the receipts so I can confirm that those amounts are correct when I'm entering them into QBO. It doesn't have to be Bill.com. It can be whatever system you're using. That's just my example in here. And here I'm asking to have that by the 5th of the month so that I can work through my month end on my schedule, right? Because remember, I said bank recs are usually done by the 5th and then work papers around the 10th. That's where, hey, I'm in here. I'm able to look at this and yeah, now I'm doing work papers and updating it. As long as you get it to me by the 5th, I'm good. It's within my time frame of things. So we fill out this information. Say that I did some sort of transaction. I have no idea. CVS, 30 bucks, right? My new balance is $70. It's doing all the math for you here so the client doesn't have to worry about it. That's always a big one. You don't want, if you've ever come across like clients and messing up math on spreadsheets, I'm doing it all so they don't have to worry about it, right? The great thing about this is that it flows to the next month. So my balance is now $70. It's pulling in the beginning balance or the ending balance from January, putting it in as the beginning balance here. So maybe I put in a deposit of $200, right? So now I have $200 in here. I go over to March. My balance is now 270. My beginning balance is 270. I make those changes. Flows all the way through. So the client doesn't have to think about it. Made it super duper crazy easy for them. But you see how this now is my support, my work paper. Now the client creates it, but it's my support to be able to support the balance that is on the balance sheet at the end of the month. Okay, let me not save that so that you guys can see that one. Now, AR and AP, things we look for on there are reviewing negative or zero balances. So you could see those were all these things that were popping out at me. Like there's something wrong when there are negative balances on your AR aging. So I want to work through all of those. Let me think. The other thing is when you have a balance at zero. Now, I don't have an example of that, so let's make one. So we have this $810 right here. So what happens when I receive a payment on that bail, right? And I put $810 in here, but I don't check this off. Okay, I know it doesn't make sense, but I'm showing you how that impacts the AR aging. So I'm going to save and close. Yes, I'm going to save it as a credit. Fine, whatever. When I come back over here and I look at it, I have $810 and the negative $810 and a zero total for the line, but they're separated out. That is because that payment was not matched up to that invoice. And that's why you would see $0 on here. It's a very, very simple thing to do to just click on this, get into the payment and apply the 810. So when I come back here, I have gotten rid of that line item. If you have an AR that is a whole bunch of zeros, just take a little bit of time to go through that once. then your AR aging is going to be so much cleaner going forward. It's just, yeah, it was a lack of actually putting in that connector, making it clear out. Uh, and yeah, it drives me crazy. It's just little things. What I want the AR aging to be at the end of the day is the short consolidated list of all the amounts that are outstanding by client into these, these columns. What I then want to do is when I'm done checking it all and making sure it looks right on my end, I want to send it over to the client and say, hey, here is the AR aging we have as of the end of the month, or you can even do it as of today or whatever. Do you want to write off anything? Do you want me to reach out to any clients? It all depends on your engagement, but that is giving you a point of contact with the client. It's reminding them what they have outstanding, and then also reminding them how you are their resource to help them with their AR, and you're helping keep track of their business, and you're, their advocate in these situations to make sure everything's on track and they're not forgetting anything and they're collecting their money and all of that fun stuff, right? So it's always nice to have touch points with the clients and provide value in these ways. So I always look at that as an extra opportunity for us. Then, so we're looking at that for negative or zero balances. Review to see if balances look reasonable. Like I said, get your approval from your clients if you need to. Then also compare to reports from third-party apps. So, this is somewhat related. I think we'll get into that one soon. Nope, not quite yet. So what I will say, and I want to see if I have this in here. Prepaid expenses, accrued. No, that's good. This is a good work paper. Okay, so comparing to third-party apps, if you have a client that is using another app for invoicing or for bill payment, right? You want to confirm that what is in that app is the same thing that's in QBO, right? And I've told you guys before that I had this client that used Harvest. This was obviously a year ago, right? Um, Things could have changed, hopefully for the better. But at that point in time, Harvest did a horrible job of integrating with QBO and getting the accounting right for things. So I would spend probably an hour or more at the end of the month cleaning up retainers, the accounts receivable balances, what's in undeposited funds, all of this stuff. So what I'd have to do is I take the report out of QBO as to what my retainers were. That was one, one aspect of the 500 different, accounts that relate to revenue of things, but this was my starting point on here. So I would take the retainer balance by client in here within QBO, right? Then I'd have all this, and then I would compare it to what was in Harvest. And if there was no difference, I was good to go. If there was a difference, then I'd run into issues of, did I need to update a transaction? Do I need to change something in QBO? Because honestly, Harvest was right. It's just a matter of the integration to QBO sucked. So I had to update QBO to make it match what was in Harvest, and take care of things in there. So I would come down here, make some changes, add things in here. So like this would be, I'd have to add in this customer Beth, put it into QBO, make sure it was accounted for at that point, right? So at the end of the day, we do all of this. I'm matching it all up and scrolling down, scrolling down, scrolling down, scrolling down, all the way down. So what I'd want is I'd have my total balance per harvest, right? And then I'd put in what was in QuickBooks as the retainer balance and my difference, right? Because I want to make sure that it was the same amount. So all the work I did in my month end here was to match up those two accounts. And it was so detailed that it was something that was like, I'm only doing this once a month because it takes, the same amount of time every time I go through it. So I was not about to spend an hour each week on this. It was more like, I'll do this once a month to make sure it all clears up and everything's the same. But by doing this, I could have gone a step further and then added, okay, here's the AR balance, those tie out, here's the revenue balance, all of these, any other accounts that I need to look at between the two, I could also put on here to make sure it all works. Or I create separate work papers for each of those sorts of things. So another example of the work paper that, I get something out of QBO, I put in what the app has and then the difference, and then that triggers me, okay, I need to figure out why is there a difference and go through that work for it. So there is that. Another thing, let's go into inventory for you. Let me see if I have. So last year, see if I have a little bit more. Nope, just have it in here. Okay, so one thing to do with inventory, remember, we want to verify that like the quantity is right or appears to be right, and the asset value looks right on things. So there are different ways that we can do that. If your client is doing some sort of physical inventory count, you can compare that to what is in QBO to see if it's accurate. You want to do that at least once a year. I understand it might just be too much to do it monthly. If they have a third-party app that's doing inventory, you could be comparing the amount, the quantities that are in QBO to the quantities that are in that app. If they are also tracking the value of those items, then you can compare the two. So you could print this report out and compare it to what is in that other app to make sure everything is integrating and syncing over correctly. Another thing you can do, you can look at the history of transactions during the time period. So you can make sure that no one's putting in a transaction to your inventory account by accident. Maybe they put shipping in here and that totally screws up the value. They just didn't do it properly, whatever it is. You want to also kind of compare the balance from or the cost from the prior period to the current period to make sure things aren't changing drastically, because that would be another trigger of something to look out for on that. So when I started working with inventory, I did not trust QBO. And if you don't know, QBO does the FIFO calculation for inventory. So first in, first out. And in this instance, I had a client where we were creating inventory. So basically putting all these items together and then had our final inventory. So they weren't necessarily manufacturing everything, but it was several different costs went in to come up with the cost for the item. So in this instance, we had shipping that was because it was overseas. and all those different costs, I wanted to make sure that we had all of that applied into these items and made sure the cost is right. So I had these in work in process, and then I had my final inventory amounts over here. So you can use this work paper to, if you want, to look at how inventory works in here within QBO. So basically, I did the calculations to make sure that calculations were correct in QuickBooks. Let me tell you, I don't think there's really a need for that, but in case you're interested on how this works, here's the work paper that I did. And you can see I would be updating it every month. I would just add on to the spreadsheet every single time. So it says at balance sheet 430, at balance sheet 531, at balance sheet 630. So every month I was updating it so that I had made sure I had the right amount on there. What would happen on here is that we would have these items, finish them, and then say move to on-hand inventory. So this 12,000 right here would be added right here now into 12,000, have the cost and the total value. So this was then what the balance was for this account as of February 2017. And I'd roll forward to the next month. If there were sales, I'd pull out the sales and then have my ending amount. The problem comes in when, because it's first in, first out, it's not average cost or anything. We'd add inventory here. Sales, I would use the remaining amount from that first order, the February 28th order, that now had a running balance of 7,900. I'd use all of that in an order, and then I'd have used the rest of it in this new 915 order, 14,000. So you could see here are my total sales right here, and then I have my ending balance. So I have my ending balance of inventory from the 228 order and the ending balance from the 915 order. It's fun. It can be very complicated and detailed. So you want to pick the high points from your inventory. Remember, what are the risk areas when dealing with the inventory for this client? Again, are they using a third-party app that you can compare QBO to? Do they have documentation of physical inventory counts? Are they doing it some other way? So what can you be doing to check that? At the very least, we want to export that inventory evaluation summary, not the detail, the summary, and it will give you the listing of the inventory items, what quantities, and the values you have on there. And compare them to prior periods, several different things that you can be looking at when you're working on those work papers. So compare to physical inventory counts, cost to prior periods, review the detail of those transactions. Like I said, maybe someone booked office supplies into inventory, screws up all your costing. Okay, you just want to take a quick look, make sure there's nothing funky in there. Now, doing a check to make sure if I have any questions. Popping out, popping in, no questions that I see in here. Okay, I'm here. Remember, ask questions, please. Okay, fixed assets. This is another area. It doesn't tend to be an area that changes a lot for my clients. The ones that I have aren't, heavy on buying fixed assets. So I'm not doing a lot with them. I don't usually do a work paper because of that. I just want to note, hey, did you buy something? I really want to make sure that you're not putting office supplies into fixed assets that are like $50 because I'm just reviewing that account to make sure there's no mistakes like that and then putting it back over to P&L if necessary. But if you do have someone that's, more fixed asset heavy and you want to be tracking some of this information, here are things to think about and to look at. You want to understand what their capitalization policy is. I believe with the IRS now, you have to have a capitalization policy on every business. So that means at what dollar value Are you going to make something a fixed asset? Maybe even what specific items are you going to make assets? Whatever the policy that whoever came up with for the company, look at that, and you want to refer to that when you are updating your books every month. Okay, so say everything under $1,000 goes to an expense account. That's something you want to track, right? Here is a template from Excel that is just an equipment inventory list where we can put in the information, and you can actually have your own fixed asset listing. There are other templates within Excel that do the depreciation, all of this sort of stuff. Maybe you calculate depreciation monthly and you account for any additions or subtractions to your asset list whenever you're every month. Then you can just have a work paper, work off of that, and do those updates as needed in there. Let's close that one so I can get back over to my PowerPoint. Things to think about on this. Yes, you want to make sure it's over your capitalization policy. You want to have some sort of information to track the asset so that you can know what it is in the business going forward. Like, how many clients just buy a whole bunch of computers and you don't have any idea like which one's which, or yeah. There are tracking systems that you can recommend. If it gets to like a big enough business, they might want to have some sort of, barcoding on their assets to know what's going on. The big thing for me that I feel like a lot of clients miss out on is they care a lot about getting that asset onto the books. They don't really care about getting rid of it from the books because we depreciate it and it's completely, in effect, it's not on the books anymore, right? But if they're getting rid of assets, we should also be taking them off of the books. So periodically, let's ask our clients, hey, have you gotten rid of any assets recently? Any computers, any desks, any changes like that, so that you can update the asset schedule. Now, if it is a smaller thing, client or something like that, my point being is that the tax preparer usually has a system on their side to track fixed assets. They already are going to have their own schedule for the tax return. So it might be overkill for you to have your separate schedule. Now, I had an instance where I didn't feel comfortable relying on what the tax preparer had, and I felt like I had more information than she did. So I took it upon myself to keep my own schedule that I could then pass on to her so it was updating properly in her system, right? So you can do that. It's again a matter of what the client's needs are. And don't overcomplicate things. Don't feel like you need to make a whole bunch of work papers for things just because you went through this class and you feel like, I said all these things that you can do. Remember, I said most of my clients, I don't have fixed assets. I am just actually on my month-end checklist, making sure that the value didn't change. Or if they bought something, I have that in there, or I make sure the receipt's attached to it so that later the tax preparer can see the receipt and add it to their fixed asset schedule. These sorts of things. So there are those examples. Checking for questions. Okay. So let's start on prepaids. That'll be our last one, okay, for this week and for today. And then Thursday, we'll pick up the rest of the work papers. So prepaid expense. This is for accrual basis accounting. GAAP basis accounting of we are trying to match up our expenses to the correct time periods. Okay, so if I pay for utilities several months in advance, I want to expense it properly over all of those months, right? So I have prepaid for them. In this example, I paid $5,000. It's for the time period from June to September, so it's 4 months. So I need to split that up and expense it over 4 months. And I'm in my setup here, I have the account and I have the class. You can utilize this template. I have that in there for you. I have a link to an extra resource guide of talking about prepaid expense procedures. What you want is, again, a minimum capitalization policy. You really don't want to be doing prepaids for $50. Okay, so have something you agree upon within the business of, okay, I'm only capitalizing things that are over $1,000. And maybe you only care about yearly things. So anything that's over a year, different things, right? Different, all those parts of the equation that we care about. Also, do you have a write-off policy? So if the balance gets below $100, do you just go ahead and write all of that off? Maybe it's like 5 years and every month it's being expensed by $10, right? So you get to under $100, you don't want to keep on doing that. How many months out? You just expense it. You're just done. Okay. Do you have some sort of thing like that in your policy? Because we want to be consistent here, but we don't want to be creating like unnecessary work that's really not adding any value to the financial statements. But hey, splitting up prepaid utilities of $5,000, I don't want that to impact. In this instance, the bill is in April. That would have been $5,000 expensed in April when it was really June through September's expenses. I want that split up over those months. Okay, so what I have here is the layout where you can put in your vendor, put in the bill date, start date, end date. It actually calculates how many months it is, right? What account and class I put it to. So what we like to do here, let me come back to the beginning, is so I have my 331 balance. There was nothing in here, $0, right? I add $5,000 in April. I don't expense anything in April, so my ending balance is $5,000. There's no change in May, right? But when I get to June, I'm going to start expensing it. So I have my expense of $1,250. My ending balance is $3,750. So looking at this, I'm going to create a journal entry that expenses all of these things. I have my support here, and I'm going to put in here, what does QBO have at the end of the day after I do my work, so that I can see and verify that I have the right amount in here. So what I want to point out is that there's two different ways that you can actually create these transactions. If you want, you can do recurring transactions. So when you have a new prepaid utility, you can go in and do a recurring transaction and expense it out every month over that time period, right? Or you can do one huge journal entry for all of your transactions and just like copy it and update it every month. My brain can't handle a whole bunch of transactions and recurring transactions because it's a little limited as to what you can view and filter and all of that. So I like my one journal entry and I just copy it and paste it over. But there's something to be said with having an automated recurring transaction in there. I still recommend having this in here so you know what you have set up in the recurring templates and you know how it should be expensed out over time. And that way we can verify it against QBO still, right? So if anyone asks, I can say, hey, as of July 31st, my prepaid balance on the balance sheet is $2,500, right? So that $2,500 is because of this prepaid utilities. If I had like 5 others, I could say what all the balances were, right? And then I could say, hey, I have how many more months on this, right? So I have 2 more months on here, and then this will be expensed out and gone by September. So you have all of that information in one spreadsheet. I can give this to an auditor if they ask what makes up that number, and it's just a happy day on things. Their support makes things easier, and it helps me calculate what that prepaid amount is, right? So that gets us to the top of the hour. I am going to go ahead and put all of these templates within the Facebook group for you guys to view. And we will pick up next time and look at accrued expenses and then payroll liabilities and sales tax liabilities. Okay. We'll go through those. And if there's any others that when I'm going through, if there's anything else I want to pick up on, I will just kind of add them in here too for you. Okay, so, or if you have specific examples that you want to ask about, ask them in the group, and I can try to find examples for you guys so that we can put them into the presentation as well. So, but thank you for your time today, and we will see you back on Thursday. Again, ask questions in the Facebook group. I'm here, I'm supporting you, and let me know if you have anything that, any questions, any kind of things that are out there. This video should be up in there probably tomorrow. Great. Thank you guys. See you later.